Good morning everyone, this is GW31979 here. Stock struggles amid housing data while China is selling off. U.S. inquiries open narrowly lower on Tuesday as Wall Street digests the latest plunge in Chinese stocks. More housing data and a couple of Dow component earnings. The volatility of these markets in China has been tremendous. Wow, said Nick Rech, CEO of Earnings Scott. Overnight, China's Shanghai Composite dropped at 6.12% and closed at its lowest level since August 7th, amid renewed concerns that the Chinese government could further devalue the yen just so they could keep up with the American market. The People's Bank of China set Chinese currency midpoint rate at 6.3966 against the dollar, but the yen fell against the greenback. That's the dollar. They fell against during the Asia trading to about 6.40%. Wow, that's pretty high. The CSI 300 and the Shenzhen Composite also fell more than 6%. Sounds familiar? Tuesday also saw the release of the U.S. housing starts data for July, which came in at 1.206 million. That's pretty high, above the economists expected and near an 8-year high. Wow. June starts were also received higher to a 1.20 million unit rates from previously reported at 1.17 million units pace. That's not bad for the housing economy, but I bet you they probably buy more repo homes than actual, say, brand new homes. You understand what I'm saying? The bottom line, the nice uptick in single family starts certainly follows the better home builder sentiment we saw from the NAHB, as Dorf of the investories is hopefully going to now be met by improved supply. We certainly have ways to go, as a 782K single family starts are still running at 25% below the 30-year average. No shit, nobody's not gonna buy a $782,000 fucking home. Everybody's going for a minimum of 250 and less. That's what they buy. Actually, more likely than not, everybody's going below 100,000. A lot of people are buying repo homes and repo property, believe it or not. Peter Brockoval, Chief Market Analysis at Lindsay Group, said in a note, the data helps the U.S. future pale on losses which came about due to the fall in the Chinese equities. Investors also took into account that the earnings release of the two Dow Jones Industrial Average components, Walmart and Home Depot. Walmart earnings will weigh on Dow, said Randy Frederick, Managing Director of Trading and Derivatives at Charles Schwab. Walmart reported quarterly earnings that missed analysis expectations and also cut its full-year guidance. Wow, that's not Walmart. Wow, that is usually Walmart don't do that. Oh well. While Home Depot posts better than expected same-store sales. Yeah, Home Depot has been improving for the last 3 years. Believe it or not, Home Depot will certainly help on the Dow, but Walmart is down more than Home Depot is up, which is true. So I think it would be a net negative, Frederick added. Wall Street also kept an eye on oil prices as they continue to hover around a multi-year lows. Wow. They're not collapsing, but they are drifting to this $40 price range, said Peter Caldito, chief market economist at Rockwell Global Capital. It is an indication that there is no capitalization in this market. Nobody's not capitalized on oil. U.S. crude oil are at CL.1. Futures trade down at a $41.80 a barrel. Supply is at an all-time high, Frederick said. Add to it the higher dollar, and it's not surprised that this market is lower. The dollar's pretty high. The dollar index trade higher at 96.96. Investors are also waiting the release of minutes from the Federal Reserve's July meeting, which are scheduled to be released on Wednesday at 2 p.m. Obviously, in Eastern Time for those that live in the East Coast. And other corporate news, sporting goods retailer Dick's Sporting Goods, or DKS, posted earnings per share that came slightly above expectations, while revenue came in line with Wall Street's estimates. So pretty much Wall Street predicted Dick's Sporting Goods going good. Dick's also raised its full year guidance. Urban Outfitters, or URBN, posted quarterly earnings per share of 52 cents. Wow. Beating estimates by 3 cents. This still revenue and same-store sales both missed expectations. Wow. Wireless carrier Sprint, known as S, is doing away with 2-year contracts in favor of a business model which consumers lease their phones. Dumb fucking idea. Dumb fucking idea. That's what I have to say. Petrobras, or PETRBR, may also have to pay $1.6 billion or more to settle U.S. probes into a corruption scandal, according to Reuters. Alright. Well, stock market is taking a shit, people, at China's side. So if you got any shit that share with China, sell it. Don't look back. You're wasting your fucking time. This is GW31979 here, and I'm out. Stay tuned.